we are going to go ahead and get started. So looking at the chart, as we said for last night's pre-recorded lecture, we said if something bearish or a bearish signature in price tipped its hand overnight, if one of the assets, I preferably wanted it to be on the S&P to run above this high one more time and then create the drop, but it failed to do so. But as we can see, the Dow right at 6 o'clock in that 6 o'clock candle in the morning session, price ran up and traded to our target, which we wanted to see, and then simultaneously created a lower time frame cracking correlation in the morning session, which caused price to return into the range. And just for one moment, as we can see this high right here, look at where the Dow closed on that 6 hour candle. It's perfection. But if we look a little bit closer, we can see that 6 p.m. candle ended up creating a TPD, which formed so far on the NASDAQ the high of the week. So we had on the Dow this open being higher than this close. So the Dow was the more resistive one for the downside, and is partially the reason why it ran up one more time. As you guys already know, the Dow is the one that is most likely to in the morning reach for targets where you'll probably think, oh, there's no way it'll go there and then reverse, or there's no way it'll, just bam, run up. But if you saw the Dow do this in the morning, this is something you should have expected, because we know the Dow has the characteristic to do that. But as we can see on the NASDAQ, this opening price right here is lower than this closing price, and then same for the S&P. So the S&P and the NASDAQ are more likely to have a willingness for lower, while the Dow is more likely to be resistive and run these highs one more time before drop. But going from the 4 hour time frame to the 1 hour time frame, we can see this would be the reversion level right here inside of that 4 hour TPD. Now, why wouldn't we look for a reversion level on the Dow? This is the interactive part. Exactly. Because it is the weakest asset for downside. And it's more likely to run out the highs one more time, creating an SMT before delivering. Now, specifically, where is the Dow running towards? Exactly. That buy side liquidity pool that we had marked out, also above this high right here, being the previous day's high. Now, as you can see, the S&P failed to reach into that previous day's high. So in a sense, this was a weekly cycle sequential SMT, but it was low probability. Reason being, as you can see, the high for the Dow was ran in Q3 of the morning session, or in Q3 of the daily cycle, while on the NASDAQ, the high of Tuesday was already taken out in Asia session, and then the S&P kind of just doing its own thing. So in a sense, yes, this was a weekly cycle sequential SMT, but there's more to the equation, and there's more high probability things that unfolded that could have told you that price was likely to do what it did. Thing number one being that 4 hour TPD with the reversion level. Now, what time did I tell you guys to look for a crack in correlation in the last night's pre-recorded live stream? Nobody wants to answer. Yeah. New York morning session. What is this right here? And you guys are more advanced, so I don't have to Some of you already know. A daily cycle bearish sequential SMT. Now, the S&P being the one that runs above the London session's high, where is it drawing into, stopping in its tracks before reversing? That reversion level. So whenever people ask, whenever I first brought out reversion levels, can you use reversion levels as a key level? Yes. In certain scenarios like this, where you have a TPD in Asia session, and it follows a line with a Kraken correlation that you're already expecting, you can treat that reversion level as a higher time frame level, for this case, to sell short and turtle soup above this high, while the NASDAQ creates a failure swing, failing to tag into the reversion level. So this is another form of Kraken correlation, where the weakest asset fails to trade into the reversion level, creating a lower time frame SMT, while the asset in the middle trades inside of the reversion level and creates that lower time frame SMT or Kraken correlation before the run. So this in and of itself is a model. If you have a Kraken correlation or an SMT on a lower time frame and you use that higher time frame reversion level as a key level, this is an area where you could enter. And where are you looking to set your stop? Above this high or above this high, or a little bit above if you want to give your trade some room to breathe. And now what are you looking to target? These lows right here. And a little bit lower, if you're confident in it. But why these lows in specific? And it wasn't too high probability, but it was there. Yes, there was a daily fair value gap, but more specifically, this would have been the original consolidation. This would have been that first phase accumulation, reversion level, drop. Now, what is specific about these lows within the original consolidation? They're unsymmetrical. It's almost as if this exact same thing formed last week, where the original consolidation had unsymmetrical lows. It's crazy. Hint, hint, nudge, nudge. But anyways, for what we can expect price to do next, I really don't hold too opinionated for either side, just because we are in the middle of the range. So it's pretty difficult to kind of gauge whether or not price would want to run higher and follow in tune with our higher time frame direction that we have established so far, or we'll run out and take these lows down here. Now, if we are to run below these lows, then we could expect to see these lows next and probably a little bit lower. So right now it's just waiting for an if-then scenario. This is in a sense a low probability price action. We don't really have too much on either side of the market to gauge a large run and have an established bias. But if we're playing in tune with weekly halving theory, and we know there are 2 days left within the week, then there is a good chance that the high of the week has already formed, and we can wait for the low of the week to form Thursday or Friday. So really we're just waiting for price to break out of either side of the range. And yes, you can find intermediate things to do inside of here, like scalps or whatever, but for actual short-term trading and actually gauging higher time frame direction and those long trend runs, right now we're just waiting for price to break out of either side of the range. And you guys already know what to look for in the morning session if you were to scalp. And now we can do some Q&A. So you're asking if the higher time frame is now bearish. For right now, I don't hold too heavy of an opinion on either side just because we're in the middle of this range. Now, if price runs back up higher and then clears these highs and hits that low right here, if we were to break above these highs, then I would expect higher prices still. But if we come trade below these lows, then I would expect these lows to be delivered next. So right now we're just waiting for the market to really tip its hand. For either side. Talk about that 1 hour TPD. I believe you're talking about this one. So you're pretty much wondering why didn't this work? Yeah, the change in the state of delivery is upward. Or remember what we had here. And also keep account for this. I think I've said this before. The only reason why these concepts don't work, or why you take a loss, is because you're on the wrong side of the market. That's it. If you can identify whether the market is likely to go higher or lower on the higher time frame, and you follow in tune with that, it is very, very, very difficult to lose. The only reason you should take a loss now with what you have is due to the fact that you were just on the wrong side of the market, and it is what it is. And yes, reclaimed reversion levels are a thing. But we probably won't get into that until like 2026. Are you aligning the 1 hour version level of the 4 hour TPD with a daily cycle SMT as you would a 4 hour FVG with a daily cycle SMT? That's one way to go about it. But yes, you can use that sequence. And commonly you'll find it with 2 a.m. TPDs. I entered on ES during London when there was a 90-minute cycle SMT at the 1 hour BPR, and this BPR was within the 4 hour TPD, and at the time ES was the strongest one to trade. However, when the daily cycle SMT formed, NASDAQ became the stronger one to trade, and I got stopped out. Thoughts on this? Sometimes in the morning session, liquidity can like switch. So while it might seem like one asset is weaker compared to another, whenever the morning session rolls around, that's whenever the new information or the highest probability information is being provided, and things like that can occur. Especially trading in London session for the index markets, not very high probability. It can be done, but things like that are prone to happen. Because the whole point of the morning session, especially have news or the 9:30 opening bell, is to pretty much entrap London traders. Liquidity dispersal theory, care to explain? That's pretty much what I've been teaching this whole time. with knowing which asset is stronger or weaker. The 1 hour reversion level on the S&P ended up getting retapped into later, in addition to the TPD candle 3. Is there a way to anticipate this? I believe you're talking about whenever it ran up higher one more time. And yes, I believe you're talking about this. How it ran up and traded above that high. So what time is this candle? Nine o'clock. Is there any news today? Was there any news? None. So what time do we expect a lot of volatility to come into the market? 9:30 opening price. Especially the 9 a.m. candle. So that's why it ran it one more time, because there was volatility injected, and then boom. Does an inversion gap need to be within the reversion level, wick, and opening price, or can the inversion gap be within the entire candlestick? Preferably within the body. If you're bullish, below. I said below. Below. If you're bearish, above the opening price. When should I move stop to break even? Whenever you've taken a partial. What was the reason for that higher time frame buy side liquidity? Are you talking about here and here? Some things like that, it's just going to be pure experience. Like there was these highs here, and then these highs here, then these highs are here. Now, if we really look and identify this and compare to where we were trading at whenever I held that live stream, we already know that there isn't going to be much news on Tuesday and Wednesday. And if we leave it in the live stream Monday night, yes, right here. So this would be from this low, or we'll just say this opening price, 6 o'clock, to this high is 148 points, while from here it's 300, and while to here it's 600. Since we had this huge run lower, I'm not expecting the markets to immediately come up and just shoot up and rebalance and deliver with this level of volatility. So with knowing that, and knowing that there wasn't much volatility in the following days to come, this high was the most reasonable for price to draw towards. You were supposed to explain that weekly time frame level. It never ended up getting tagged. We were wrong. But for whenever you have lows like this that are directly in correlation with fair value gaps, call it just a break of structure gap, because price broke structure below this low, simultaneously creating a gap. Usually you can use this as a draw for if you want to see price draw towards that, and you can also use it as an area for price to reject. I know that's not institutional order flow and Trujo. Institutional order flow entry drill is where price will just barely tag inside of a gap and then continue. Let me see if I can find one. Like this right here on the Dow. How price barely runs below this low, trading into this gap. This would be like an institutional order flow entry drill. And you'll typically see that in markets that are really quick. Is SMT between 2 weeks a thing? For example, SMT between the highest point of week 1 and week 2 of a month and the highest point of week 3 and week 4 in a month? Yes, and that is doubling SMT. On the coming weeks, are you going to go live on Monday instead of Sunday? It all depends on the economic calendar and what's being shown. But before every live, like if we, the schedule will remain for Sunday and Wednesday until I make an announcement about it, saying that, hey, we'll do it on Monday. I've seen more success lately with trading my options account instead of futures account because I know I can handle the drawdown. Any advice on how to get more precise entries within a reversion level? Like for example, waiting until one of the assets to turtle soup. I'm trying to not blow my funded pretty much. Yeah, that's one way you can go about it. As long as you choose the correct asset, that reversion level will hold. And then you can trust that the high or low, for example, this. You could have your stop safely set here. This would be candle 2. This would be candle 2, but you could have it right here. Either one of these. Or if you wanted to be a little bit safe, you could just have it a little bit higher, just to be sure. And then you can trade inside of anywhere inside of this reversion level. You don't have to trade the highest point or the lowest point. You could get in just somewhere around there and then safely have your stop set. Or you could wait for the weakest asset to trade above or below the higher low to create the SMT first, and then look for something on the lower time frame, like a fair value gap, to get alongside the run. Exhibit A. Or if you really wanted to be crazy, go into like a 1 minute chart. And still trade off of this lower time frame gap, but have your stop set as if you were trading the reversion level itself. Is the 1 hour fair value gap combined with a first phase accumulation a high probability? I believe you're talking about this one right here. Talking about this 1 hour fair value gap. On the NASDAQ. This one, yes, if price would have retraced into here, this would be a high probability, but the move was quick and it just, boom, left it unfilled. But in certain scenarios, whenever, let's say for example, we already traded past the original consolidation, as soon as we get below here, this becomes, or I view this as more so a balanced price range. And balanced price ranges and BPRs, there's two different forms of balanced price ranges, which we'll get into. There's the one where it's two fair value gaps that look like they overlap each other, and then there's the real balanced price range. Is the daily candle advanced premium and discount sequence applicable here or right here now? In a sense, yes, because I would expect to see, especially for tomorrow, I don't think they're going to leave this gap open. I'm not expecting this gap to stay unfilled. But I'd also be kind of surprised if they make price go higher and trade above equilibrium of the range. I wouldn't really be looking for that. For if we trade above equilibrium of the previous day's range, which would be the advanced premium and discount sequence, and we close above here, then I would expect these highs. But you can use this gap right here as a draw on liquidity for now, just because, quote unquote, it is a premium gap. Now, as far as whether or not we will trade into here, that's a different story. But in a sense, yes. Can we expect Dow to trade into premium? More than likely. Dow had a pretty consolidative day. There's also this. That aligns perfectly. But we'll have to see. Definitely coming into tomorrow, like the way I would come into tomorrow would be, number one, have the true open and 6 a.m. open established, and if there's a bullish cracking correlation that forms first below there, look to target. But if London session were to trade higher, then look for a bearish cracking correlation for continuation lower. With that being said, I think we're going to wrap this one up here shortly. One hour and 50-minute CPDs yesterday and price reviews were not below their true opens. Is that okay? So the only one it didn't tag below was its normal true open for the true day, but it was below the true week open. And I haven't, there's more to it, especially with stacked true opens, but you can use, I don't even know if I should say it, but there are more true opens and more ways to gauge price, but the things I've given you are just the highest probability. But as long as one of the assets goes below or above one of the true opens, similar to how SMT works and validating sequential SMT, as long as you have one of the assets go for one of the true opens, you're good. Not a question. Just wanted to say thank you for everything. Already have a good idea of what price wants to do, but you just leveled me up to a different level. Of course, y'all are welcome. I feel like we did pretty good this quarter whenever it came to identifying and predicting price. That streak that we went on from November was crazy. Who remembers that? From November till I think it was, we only had 1 week where we really got it wrong for that entire week, and it was, I believe, right here, where I wanted to see price trading in these highs. But apart from that, crazy. Q2 continuation model, yeah. There was a 4-hour fair value gap created during Monday's run upside, which were sliced through today. Is there a way upfront to know whether they are high probability FEGs or not to consider them? Yes. And that's going to come from, which I believe I said this before, but those gaps that were created on Monday, typically you only want to see gaps. Get used to support price if it is sequential. So since it was Monday, and then these gaps got sliced through on Wednesday, Tuesday was in the middle, PD arrays can be sequential. So if those PD arrays were formed on Tuesday, and then Wednesday I tagged into them, I would look at Wednesday as more so a continuation of those PD arrays. But since Monday formed them and Wednesday sliced through them, they become a lot more less probable. Have you heard about TAPTA? Yeah, and I think it's bullshit, but can't wait for us to go to all-time highs again, which I think you still would think will be reached. If it does, that is truly insane. It'll be reached in the future, most definitely. There's a 100% chance that price will return to these highs at some point in the future. It's just knowing when the run is really there, because right now we still don't have much information to say that these highs are likely to be hit again, because price could very well continue lower, run below this low, and then go for these lows, and then make the real move. Yes, so weekly TPD is something that we need. If we get a weekly TPD with a daily time frame reversion level, One signal. But specifically, if it were to form, I would want to see it, and I have no idea why my DAO is just frozen right now. But hit Control R. I feel like that might do. I feel like that might do something to my computer. Like it's gonna just close everything. I've seen too many clips of streamers. Okay. I would have hit Control R and then my PC just would have shut down. Yeah, with that being said, hopefully y'all found this one insightful. I will speak with you all again in the pre-recorded lecture. Good luck and good trading.